This is our Forex blog for April 27th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. Every trader knows that you should trade with the trend. But what trend? The 5-minute trend can be up, 30-minute trend can be down, daily trend can be up, the weekly trend can be down, the monthly trend can be up. Which trend do you trade on? Well, that depends on your time frame. If you're looking to get 5 to 15 pips, or if you only have an hour to trade, then you're going to want to use the shorter time frame trends. Who cares what the monthly trend is if you're only going to be in a trade for 30 minutes and you have to go to work? So we have created our currency meter that shows you all the time frame trends, and you can focus on the ones that are most important to you. And these are designed to run on range charts. They only work live. When you bring it up, you'll see nothing except for the real-time trend. Underneath that, we have the percentage of currencies above and below their 15-minute, basically 15-minute trend, hourly trend, daily, weekly, and monthly trend. So you can see the dollar started off coming into today strong and then shifted red right here. You can see a very high percentage of currencies were on the 15-minute trend were down. The hourly shifted down, the daily shifted down, and that's what typically happens. Real-time trends move, then the longer time frame trends, then even longer, then the daily, then the weekly, then the monthly. The weekly and monthly are already down. So when you see a real-time counter trend move like this, that's going against the weekly and monthly trend, usually the trend reverts back into the direction of the weekly and monthly. So seeing this between the dollar and the yen, which both had a bit of weakness today for a couple hours, and this one even longer, the yen had a daily trend that's extremely strong, weekly trend strong, the monthly trend strong, but the dollar was weak. So it's a no-brainer, unless you can't see red and green, that you want to be selling the dollar. Now, what do you want to buy against the weak dollar? Well, whatever is the strongest one. This is really starting to show some weakness here at 332, and the 15-minute trend shifts down because it's in the direction of the weekly and monthly trend. Ideally, I'd want the daily to be down too, because I know the hourly is going to switch. If that trend does continue, it's going to switch very quickly, which it did, probably about a half an hour. Some days you have a very weak currency, and the strongest one, unfortunately, has longer time frame trends that are down. Today, the euro was an instance here. The Swiss is showing some strength, but it's not really that strong. The Australian is the highest probability one. Not quite the same intensity, real-time strength as the euro has, but more longer time frame trends and a much higher percentage of Australian pairs going up. So if you really are a very cautious trader, you would pick the Australian to buy against the dollar. It may not give you the most pips, but it should give you a higher winning percentage and more stability and less anxiety in pulling the trigger, risking your hard-earned money. So let's take a look at that, Australian dollar. And you can see that's exactly what happened. Look, strong Australian, weak dollar, pretty much just went up, 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 up from the point where it showed up here around 3 at 0380. It went up 90 pips. Now, obviously, you're not going to catch up all those 90 pips, but our trailing stop did do a good job getting in here, out, in here again at 13, out at 37. For a nice 27 pip win, and again here at 39, and it still has yen. It's up about 40 pips on that last move. So the currency meter, when you stack the odds in your favor, and you basically stack the trends in your favor, you tend to do better. Between the dollar and the yen last night, before the weakness showed up, the yen was clearly much stronger on all time frames. You would have wanted to buy the yen, and one of the weaker ones up at that point until about 4:30 was the euro. So it was a no-brainer before to sell the euro yen coming up to 2-3 o'clock. So you can see it went down. We had a nice little counter trend move up here. It fell from around 107.30 all the way to 106.20, 110 pips. Let's bring up the range chart on this. That was a 5-minute chart, and this is a much easier way of trading, in my opinion. And you can see just straight down, and you pretty much knew to be looking for sells. And even if you missed the first big move here, you wait for a counter trend move. Short here at 60, out here at 46. It's 14 pips. And 14 pips a day, or I should say 10 pips a day, doubles your account every 2 months using a very small, 2% risk per trade. That means you're risking 2% on a trade. You lose 3 times in a row, you're only down 6%. One nice trade sometimes can give you 10-15% account growth, especially if you get 30, 40, 50 pips. So the currency meter, it makes trading a lot easier. Now, when it gets underneath the lower white containment band, it's much more apt to reverse. I usually wait for at least a 15 to 25 pip move up before I look to sell it again. From the low right here at 24, it went up to about 60, so that would be, equivalent of that. Here's the previous day's low. When it comes up to that area and can't get above it, it's usually a pretty high probability trade. 15 pips there, 10 pips here. Had a false breakout back inside yesterday's range, came back down, went from 47 all the way down to 23. So even if you got out of this at 32, you made 15 pips on that one. Pulled back up again, couldn't get it back above the previous day's low. It's a resistance area, and it pulled back again 30 pips. So when you know the direction, trading's a lot easier. Shorting, 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 and it was only after about 4:30 right here where some real strength came in to the euro. Another one that was weak is the Swiss on multiple time frames, and especially the real time and a very high percentage of Swiss pairs were underneath their 15-minute bars moving average and hourly bar. So this one's showing you kind of a combination of multiple different statistical tools, some of them measuring the percentages of Swiss pairs going up or down, and other ones measuring the intensity of how much up and down they're going. So anytime it's at or above the 80 level, it's pretty weak. This one's weak on pretty much all time frames. So this is not a pair I usually leave running, but if you bring up a 5-minute chart here of the Swiss yen, this one also was a wonderful one to be selling. And even if you missed the first or the beginning of this move down, you get a counting trend up move here, you sold. Maybe you only made 5 or 6 pips here, sold this, fell from 70 all the way down to 35. And basically that's it in a nutshell. When the yen was strong earlier in the day until about 4:30, and the Swiss was weak, you're looking to sell it. And one of the reasons why I modified our currency meter, before I would show the real-time trend, and underneath that the daily, weekly, and monthly trend. Less than a week ago, I put on the 15-minute and hourly trend, because if you see some strength coming in and it has high enough percentage of, in this case, New Zealand pairs trending up, then to some extent, especially if you're a short-term trader like me, you can ignore, especially the daily, weekly, and monthly trend, which could, it might take 1 to 3 hours for the daily trend to shift up. It could take 2 or 3 days sometimes for the weekly trend to shift, and it can take a week, week and a half for the monthly trend to shift. So, if the New Zealand's going to go up for the next 2 weeks before it shifts the monthly trend up, I'd like to be riding those the next 2 weeks up. I don't care. I'm in and out, in and out, in and out, in and out, sometimes taking 10 to 15 trades in a 2-3 hour period. Occasionally I'll do 2 or 3 trades at the same time. That's why I'm able to do so many trades. Statistically, the more trades you take based on a proven methodology, the more likely it is to have real-time results that match historical results. On any given trade, it could be a loser. You take 5 or 6 of those trades, you're more than likely going to catch, 1 or 2 or sometimes 3 or 4 winners, and hopefully 1 or 2 of those trades will be nice, big 30, 40, 50 pip, juicy, huge winners, which will get rid of the small 6, 7, 8 pip losses. So the New Zealand, and also, by the way, anytime you see extreme strength, rarely do currencies go up or down forever. You have a move up and then a move down, move up, move down. Well, the up moves are showing more intensity than the moves down, and a decent percentage of currencies are trending up. In this case, pretty dark green here. It's not like it's something like this, which is, I would never buy a currency that has a light green trend up if the daily, weekly, monthly are as red as this. But if you see some real-time strength followed by a pullback without much weakness and a very good percentage of the 15-minute trend goes up, at 4:30 right here, you can consider buying the New Zealand. Now, obviously, the Australian is a much higher probability. This is the kind of trade that, if I was going to make an analogy, that you would put your parents' and grandparents' money into. But if you're a real-time trader and you know what you're doing, you certainly can take this trade here, too, in the New Zealand. Now, obviously, the dollar was the weakest. It was the highest probability. And this one has a weekly trend that's down and monthly trend down, and so does the New Zealand. So they kind of counteract each other, and the real-time move is up. So buy the New Zealand dollar. And you can see, especially after 4, around 81.35 or 6, it went up 90-something pips. Up. And there's basically 2 methods that we look for entries. I prefer a pullback trade, which you can see it only really resulted in a little pullback right here. And the other entry method is simply looking for a rectangle pattern that goes sideways for a minimum of 30 minutes. I prefer 2 hours. So here's a 30-minute one. It went up and went sideways, and also this is another one. Went up, went sideways, breaks out, you're in. Trailing stop pretty much kept you all the way until it's 64. Whether you bought this one here and only made 16 pips, or if you got in here and made 25 pips, and you have another rectangle pattern right here. Notice when you're in a currency where the trends are going your way, very high percentage real-time momentum, and I didn't put the 15 and hourly percentages on this one. This one shows the daily, weekly, monthly trend. The daily trend shows up here at 5. The weekly a little bit later. You can see it took a long time at 8 o'clock before the weekly trend shifted up. It was going up for 5 hours. And that's why, you can look at the weekly trend, and anytime you have a weekly trend, anytime all the trends line up, it's a relatively high probability trade. It doesn't always work. You occasionally get losers when you have all red here and all green in the other one, but it is rare. And the more trades you take and the longer you look at our software, you will see that for yourself. And that's why we record our class in our Forex blog. We record a Forex blog every day, and couple Forex classes a week. If you go back on our Forex blogs and you watch this methodology in action, you'll rarely see a currency that's really super intensely weak. All the time frames are weak. If you sell that one against another one that's strong on all time frames, which sometimes doesn't happen. Sometimes you have one currency that's weak on all time frames, and there's no perfect super strong currency to buy on all time frames. You don't really have one of those except for the yen. And when this one went weak, the yen was strong for a while, then unfortunately an hour later shifted down into some weakness. So you only had a brief hour here to trade the weakest versus the strongest. I'm going to end this blog today. When you saw earlier today the euro was weak. Let's scroll back here and see how the Australian was at that time, from about midnight till 4 a.m. There really wasn't that much strength there, unfortunately. Even though, more of the longer-term trends were up. Let's look at the pound here. It really didn't have super intense strength except for a few hours before midnight. Briefly about here. So, because the pound is strong on most time frames and the euro's weak, so is the Swiss, you could buy the pound Swiss and sell the euro pound. So let's take a look at those earlier in the day. You can see the euro pound, went down during those times. Pound Swiss, especially until about 4 or 5 o'clock, probably was likely to go up. You can see up, 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 pull back here, up. And when it's above the hourly, it's more likely to go up. When it's underneath the hourly, it's more likely to go down.